How much gold backing do you want? In a recession, silver is going to lag or even go down a little bit because of, so it's about $23,000. So just to be clear, that's not saying that gold is going straight to $23,000 an ounce. That's saying the money that does matter, the money that does drive the economy, doesn't come from the Federal Reserve. It comes from the commercial banks, and that's M1. It includes bank deposits and so forth. So I use M1.
What if gold wasn't just valuable, but essential? Jim Rickards believes that gold could surge past $25,000 an ounce, not as a guess, but as a consequence of forces in motion right now. Imagine if the dollar needed to be fully backed by gold. What would it take? Why does the Fed seem so uncertain about what money even means? And could this be the start of a new financial era where gold, not paper, holds the real power? Don't miss this. Jim's about to reveal the eye-opening truth behind the numbers, the gold and the dollar.
For a long time, go back 5 or 6 years, I had I said gold could go to $10,000 an ounce, and recently I revised that upward to, you do the math, you can update it, but kind of $25,000 an ounce. I should explain what that is. It's not well, it will get there, but it's not a hard forecast like, buy gold because it's going to $10,000 an ounce. Instead, it's an expression of it answers a question. The question is, what would the dollar price of gold have to be in order to have the dollar backed by gold? In other words, whether you want a hard gold standard or soft gold standard or any kind of gold reference, why are we not in that system? And what would the price of gold have to be in order to be in that system? And the math is fairly simple. We can do calculus, but this is kind of 7th grade math, or at least where I went to school. So basically, take the money supply, and right away you run into problems. Everyone thinks they know what money is. Well, no, the Fed doesn't know what money is. They have M0, M1, M2. They have all. Whenever you see 5 different measures of money supply, it tells you right away that the Fed doesn't even know what money is. But anyway, I use M1. M0 is base money. That's the money the Fed prints, but it doesn't mean very much because they print it by buying securities from dealers, and the dealer sends in the 10-year notes or 5-year notes, and the Fed pays for the securities with cash. And that money does come out of thin air. That's not just a metaphor. It does come out of thin air, and they pay the banks. The question is, what do the banks do with it? They give it back to the Fed in the form of excess reserves. So all you're really doing, you're expanding both sides of the balance sheet. You're piling on Treasury securities, and you're piling up liabilities in the form of excess reserves. But that money is sterilized. It's not doing anything. No one's getting to spend it, and there's no velocity. The money that does matter, the money that does drive the economy, doesn't come from the Federal Reserve. It comes from the commercial banks, and that's M1. It includes bank deposits and so forth. So I use M1, and then we know the amount of gold the government has, 8,133 metric tons. People go, it's all in Fort Knox. Actually, it's not. About half of it's, a little less than half is in Fort Knox. The rest is at West Point. There's a vault there. Can't disclose the location, but it's there. And people ask me all the time, say, "Hey Jim, who owns the gold? Is it the Treasury or the Fed?" And I say it's the Army, because they're both Army bases. I mean, West Point and Fort Knox are both. I mean, the legal answer is the Treasury owns it, but it's stored in Army bases. So M2, I don't know the number off the top, or M1, sorry, I don't know the number off the top of my head. You can just go to the Fed website. And 8,133 metric tons, break it down by ounces, divide one by the other, and you, one more assumption. How much gold backing do you want? Now, the hard shell Austrians will say 100%, if it's not, it's leverage, or, it's not a solid standard. Historically, that's not true. The Great Britain, backed up by the Royal Navy, ran a very successful gold standard in the 19th century. They had about 20% backing. At any given time, the Bank of England had about 20% backing for their notes. The United States used 40% backing until around the end of World War II, and then they went to 25%. And they ended up at zero by the late 1960s. But it was either 40% or 25%. So take your pick. And the British were about 20%. That's what you need to instill confidence. So my math is take M1 take 40% of M1. That's the dollar amount of gold you need to have a strong gold standard, divided by the number of ounces in 8,133 metric tons, and you get a number. And that number today is around $23,000. So, but it keeps going up, and the reason it keeps going up is that the gold supply is constant and the money supply keeps going up. So again, fifth grade math, you're going to get a larger and larger number of dollars per ounce in order to back up a higher dollar amount with the same amount of ounces. So it's about $23,000. So just to be clear, that's not saying that gold is going straight to $23,000 an ounce. That's saying if confidence in the dollar were undermined and you had to resort to gold to restore confidence, you can't just pick a number. If the number's too low, it's going to be highly deflationary, which is what happened in the late 1920s. So what would the number be? And the answer is around $23,000 an ounce. First of all, you're right. I spent a lot of time analyzing gold, not so much I do invest in gold mines. I've been in gold mines and know a lot about the production side of the business, but my main interest has always been gold as a monetary asset. The truth is gold's not good for much except money. I think it's the best form of money. But you say, well, what else can you use gold for? Well, jewelry. Well, okay, jewelry is just a form of wealth that you wear. You see an Indian bride draped in gold chains. It's beautiful looking. Yeah, but that's her dowry. That's her down payment on the house. That's the kid's college education. So jewelry is just just a different way to store bullion. But so gold is not good for much except money. Silver is different. Silver is a precious metal. It can be a form of money, has been, and still is, but it has a lot of industrial input. So when it's an industrial input. So when you're analyzing silver, you've got the precious metals analysis on the one hand, but you have industrial input on the other. And that makes it tricky because if you're in a recession, let's say the price of gold is going up, silver will tag along. Silver will be along for the ride. And you're exactly right. It tends to lag and then it shoots up. But in a recession, silver is going to lag or even go down a little bit because of reduced industrial demand. So it's harder to analyze because you have to balance one against the other. On balance, the way I think about it is subject to timing differences. If gold performs the way I expect, silver is along for the ride. So you'll get to $40 silver, and sooner than later you'll get to put it this way: the world of $10,000 gold is the world of $100 silver. And employment, as people know, tends to be a lagging indicator. So when you see trouble showing up in the employment markets, you may already be in the recession. You just don't know it yet. I mean, the National Bureau of Economic Research, that's they call kind of balls and strikes, and they're the ones who decide when a recession begins and when it ends. It's not a government agency, but they're all, it's like 12 or 14 PhD eggheads who, most of whom have been in government service or all in academia one time or another. But a lot of times by the time they declare a recession, it's already over. Meaning if a recession is 6 months or 9 months and it takes them 9 months to make up their minds, it's like, well, the recession started, last January or whatever. Like, well, thanks a lot. We've been living through it. We think we knew that. But, and that's okay. I'm not faulting them. I'm just saying that, you can be in a recession, not even know it. You feel it. It might affect you or your neighbors or your business, but there's nobody waving a flag saying, hey, it's a recession. And B, by the time the scorekeepers jump in, it could already be over. So that's one sign. And then within that, just to kind of parse the numbers a little bit, the vast majority of these jobs are going to non-citizens, some legal, some illegal, but none of them U.S. citizens. And they tend to be, not exclusively, they tend to be at the low end of the wage scale. So what's happening is, I'll refer to illegal immigrants in particular. These are the people working for $5 an hour. They're lined up on the expressway entrances, and you pick them up and they'll come, clean your yard or whatever.
So, could we really be on the path to 25,000 gold? The truth is, as Jim explained, the value of gold isn't just about shiny metal. It's about stability, security, and a dollar that may need it more than ever. If today's insights have left you questioning where our financial future is headed, make sure to like, subscribe, and hit that bell icon. Stay tuned for more in-depth analysis. Until next time, Stay informed and prepared. Thank you.